Hey, it's Sammy on January 14th. We took 7 trades in YM today. We had some big inflation data. Had 224 points. We did have a few break evens in there. Let's take a look and see how everything played out. This was our first trade prior to red news. We were breaking deviation 1. That's that red line. We had plenty of momentum, some sentiment, a couple volatility breaks. So we're going to go down and test deviation 2, which is that yellow line right below yesterday's high. We got the stop loss in profit, so the trade is risk-free and protected, and we're gonna hit this 30-point take profit right before the red news. All right, so this is our second trade. You can see this is a 15-second chart. Look how gigantic. Thank goodness we hit our take profit. We would never be in a trade before red news anyway, so we would have shut the trade down, but it hit our TP, and a few minutes later, red news hit, bam, went all the way up to the third deviation band. Of course, nobody wants to buy when it's that high, so we had a signature soda reversal, and we quickly reversed and came down and hit our 47-point take profit. Now this is the continuation of the short off of red news. We're going to go ahead and re-enter this short. We are coming back through the value area to the high side. So there is now short time frame data firing. All of the high time frame long data has already decayed and flipped over to the short side. We already have the trade protected with the stop loss and profit. This has been a risk-free move the entire time. And what's going to happen is we're going to go ahead and lock in right when we hit this line right here with 46 points. So we can see where I have that pink box down at the bottom, price pulled all the way back down. Now we're coming back up through VWAP and our 200 moving average, but you can see we had a trend line there that actually made a bullish flag pattern. If you're a flag pattern trader, the key is that we're using data to confirm whatever strategy or theory to give us a higher probability. We have short time frame data coming back up through the value area to the high side. We've had the trade protected, our profits in, our stop losses in profit. Trades are risk-free when you trade with data. The minute it moves away from your entry point, you can protect the trade. 95% of the time, it's gonna go. You can see even when it pulls back, it's just temporary. We only have short time frame data, but it's not even coming close to our stop loss. So we're gonna stay in this trade. Now, as we punch through this 123 Fibonacci extension here, we're hitting that value gap and value area high. We're gonna go ahead and lock in 48 points. All right, so now we can see we're trading the open. The market went all the way back down in VWAP, the high time frame data, all the data is starting to realign and go long. We're gonna enter this trade and come through the open and try to lock in right under R1. Keep in mind the market's already been here. We move our stop loss into profit to protect the trade and get a break even, which in this case you can see quickly happened. We're going to take another stab. Now notice we don't have a lot of confluence with our data. We do have data shaping up to the high side, but it's not as powerful. Plus we're trying to get through the open. We're trying to get through value area high. We're trying to get through deviation 1. That's why we're protecting this trade so quickly, because in this case, once again, now we've had 3 fails to go long with a break even here. Shame on me twice for trying to go long. Nobody saw value in going long up there. So our reversal process kicked into play right here. Now we are going down. We're going to test that deviation 1 area. All the data is starting to decay. The short time frame data is flipping over. And of course, we're going to protect these trades by moving that stop loss into profit. We got stuck a little bit there at VWAP, but we quickly smashed down. We got all of this volatility, sentiment, and momentum for 53 points.